Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I am Frank Ochoa, aka PivotBoss, with analysis for January 6th, 2016. Here's a look at the daily time frame of the ES. Where we last left off, basically, I mentioned that 1991s were an area for retest defenses by bulls here. But I mentioned that if price fails to hold 1991, that's going to put pressure on 1981s and likely lead to a downside break of the key range. And that's what happened in overnight trading here. We've seen significant selling pressure that has led to breaks of two key levels here short term, and any close or hold below 1991 would suggest a clean breakout from this larger key range. The key range from 1991 up to 2102s is a very important range. It's been building out since mid-October. So all of this right here has been two-sided trade this entire time, meaning there are stops on both sides of the range here. If prices fail to hold above 1991s and especially 1981s, this could trigger downside sell stops, which leads to the downside targets I specified before, 1935 and 1879. So right now it's very important to see how this thing plays out. Bears are going to look to defend all pullbacks now into 1991 for a shot at seeing a downside follow through into 1935s. If there is a rejection of prices below the previous month's low and price closes back above the zone, this would be another rejection of price levels below that area, and that would further strengthen responsive bulls for a shot at returning price back toward the HVN. But right now, we have to see how this thing plays out heading into the rest of the day. Closing below 1991 would be a clear indication that a downside follow-through would be seen at least into 1935, with a shot to see a follow-through into 1879. All right, let's take a look at crude oil here. Crude oil has also violated the bottom of its narrow range here. This is very important. I talked about how prices were rejected above the previous week's high, and that typically leads to a move across the range into the previous week's low. We saw that already. We also talked about how price went offered here at value, 36.88. Taking value offered is an indication that price is in a price discovery phase and that prices at that level are being rejected. Thus, the market needs to auction lower to find a key area of value or create new value. In this case right now, prices tested our key level here at 34.80. And that's a short-term area of support for bulls looking to defend for a shot at returning prices back toward 38.09. Failure to hold these 34.80s opens up a move into the next downside targets. We have two targets to watch out for, the 25 and 50% monthly expansion targets at 33.31 and 31.28. So any failure to hold above the previous month's low price at 35.35 would suggest a continuation into these downside targets ahead. All right, let's take a look now at gold futures. Gold futures here has seen a push higher into the top of the key range, or its narrow range. We talked about 1088 being an area where bears want to defend, and so far in pre-market trading here, we've seen a nice push higher, and then we've seen initial defenses at that area by bears. So bears are looking to defend 1088s for a shot at returning price to value at 1072. And then auctioning this thing back towards support around 1048 to 1045. So right now that's the short-term direction, but any push and hold above 1090 would suggest that an upside break from this narrow range would occur, and in that case we'd likely see a push back toward 1123 with a shot to see a full-on continuation into 1169. Again, it's best to avoid the chop in the middle of the range until expansion occurs, unless you're fading the edges. This is an opportunity to fade the edge with a narrow stop. Otherwise, expansion from this range is going to be the major move to look out for. Lastly, let's take a look at the NQ. The NQ here, we talked about very similar to the ES. If prices weren't able to hold 44.49, it was going to put significant pressure on the downside and cause a breakdown from this range. 44.49 up to 47.23. That's the key range to watch. Obviously, we've been developing that range since mid-October. A breakout from that range would suggest movement to the expansion targets dictated by the range. And right now, 43.11.5 41.74. Those are the downside targets that we're going to be looking for. So early on here, bears have the upper hand. They've gotten a solid break through this LVN right here, the CLVN. That means that any pullback into 44.49 from below is likely to be a selling opportunity by bears for a shot at seeing a continuation into 43.11.5 and the potential to see a follow through into 41.74. Again, if prices fail to close back above these 44.49s, it could be significant and we could see a continued downward price discovery phase into these downside targets. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session and the rest of the week. Good luck and trade well.